This is the NIO chart. This is a chart that has gone way up in 2021, hitting a high at $64. And right now we're trading back at $4.70. Now, one thing that I'm looking at for NIO is we've come into a bigger area of support. And there's one particular level, and I've made a post about that in the analyst ideas. But so this is zoomed in the last like couple of months and days, right? So this is the chart. What I am thinking, right, is to get an entry based off of this level here, 437, but really you can take 4.4. So I'm actually going to put it up to 4.4, nice round number. I'm thinking to myself, you put an alert at 4.4. And then the moment it gets back above it and closes, let's say a 1 hour candle back above it, you can take an entry there. So the entry can be a 1 hour candle to close back above 4.4 after you first went below that level, either with a wick or with some candlesticks. And what I'm thinking is, so you enter the 1 hour candle, close back above, and actually we can put our stop loss here at 360 and we can aim for a 2-to-1 risk reward, basically aiming for, let's see, 634 is the target. So very simple. We'll work with two targets. So 634 is the first target. You can take 75% of your position there. And the next target could be, I wouldn't even aim for too much with this, just let's say 724. So 634, 75%, and then 724, the remainder 25%. And like ideally what I want to see is that this thing comes below this level, closes back above on the 1 hour. And at that point, I'm willing to take a bet that this is then the low and that we're basically going to start uptrending, something like that. And this is the level where we're looking for an entry, right? But not with a limit order. We really want to get that 1 hour candlestick at least to close back above. So, and for risk management, right? I would suggest that if you're working with, what is it, $500?
Yeah.
$500, 1% is $5. So you can use $25 to buy shares when you take your entry, not more. Because if you stop out, then you're going to risk 1% on your account. But if you do anything else, that means that the stop loss could become 20% if you don't know what you're doing. Like if you take $500 and you take an entry and this stops out, you lose 20% of your account. Then you're immediately down bad. So that's why you got to take just $25. So that means, yeah, you might only have a couple of shares there, and that's exactly the point, because we're going to aim for 2-to-1 risk rewards. So if we're always just risking $5 and we're aiming to get 10 or more in return, that's going to be, this is going to be the non-degenerative way of going about our business. That's also the problem with these streams that only cover levels, because the real unspoken questions aren't answered. And what is the unspoken question? People need to know how much money they can take, how many shares they can buy, and where to put their stop loss. Even if your levels and your trades, you can be right, but if your members are losing their account, it doesn't matter that you're right. So you rather be wrong and have them risk 1% on an account and be motivated to do this over and over, and to actually have the perspective of, oh yeah, we're not just doing some silly stuff. We're actually like approaching this like professionally. I think that's maybe one thing to focus more on in the streams, like really guiding members and not just saying, oh yeah, that level is a buy, but okay, let's talk about what is your account size. Do you understand how much money you can use in your account to buy there? That's something, dude. Like we can make a course just of that. Like that is a video that we could make together, how to calculate your position size. Let's talk about that.
We should definitely do that.
But that aside, that's the first option. I'm assuming you want maybe how many charts? 5 or so?
Yeah.
So NIO is the first one. Now we're working with a $500 account, you say. That means that we actually have some money to work with. Let me take as well a look at TripAdvisor. This is a chart that has been coming down. So this is how the chart looks for Trip. And I'm very interested, but I'm only interested after price goes lower and then to play the reversal from lower. So you see how I'm marking out that level there. And I'm not sure if we're going to hit that and if we're going to hit that quickly, but I do know that that would be a very good position to take, what I'm about to tell you now. So 13.73 is the level that we're going to base an entry off. And what we want to see is a move below 1373 and then a 4-hour candlestick that closes back above 1373. Then the stop loss for that position. So if this is going to be our first target, let's see. Let's see, 2.5 risk reward seems good to me. So stop loss 12.02, for example. And our first target is going to be 19.37, 75% of the position. And the remainder 25% of the position, we can target, let's see, 22.59. And that's kind of a bigger swing position. So this might be a slower moving one than that NIO, but it's probably still good to be aware of it.
Really solid strategy.
Thank you, sir. I have spent a lot of time getting to realizations and to like simplify things. So at this point, you could say that I'm quite good at just seeing the opportunity. So I understand that price is here and that it's very likely going to want to get all the stop losses that are below this low and that are below these lows. After people are then getting stopped out, I'm looking for price to get back above that level to basically get on board after all the stop losses are taken. And then I basically just target it back up in the range here. And then if it doesn't close back above, well, it might roll over to literally $5. I won't be in a long position, right? For a $500 account, that's going to be a 15% stop loss. So I got to do some calculations here. 100 divided by 15 is 6. Let's do, so that's 6% of 500. So that's 5 times, it's $30. For a trip, you can use $30. I'm looking at this symbiotic as well. That is an AI related equity. And I have two options for this chart. So I'm either looking at 37.22 level, or we want the 29.62 level. So there's two options. And we want a 4-hour close. So I remember saying for NIO, it's a 1 hour, but for SYM and for the previous one, we're definitely going to look at 4 hours.
What determines the difference for you when you decide a 1 hour versus a 4 hour?
It's a very good question. Now, for SYM and for this previous chart, I was taking weekly levels. And so weekly levels of interest, I like to combine that with a 4-hour confirmation. But for NIO, that 4.4 level is actually a level that I got from the daily time frame. So a time frame lower than the weekly. That means that for my execution, I also want to go like a time frame lower. So instead of 4 hour, I'll look at 1 hour. So at 37.22, get below it, close a 4-hour candlestick back above it. That's going to be our entry, or getting below 29.62 and closing a 4-hour back above it. Now, for stop loss, when I teach this strategy, right, the stop loss is always, and I'm just going to tell you as well, but I'll give you a fixed number, right? But the real strategy would say, and that is where you put your stop loss. And then from where you enter to where your stop loss is, you're actually targeting up a 2-to-1, 3-to-1 risk reward. So that is better results than just giving a round stop loss. But just for this, I'll try to do my best to find a round stop loss. Target 1, 47.42. So that can be this high there. That could be the first target. And let's see where the stop loss could then be. Let's do 34.17. That's like a round number stop loss then. If I really have to give a round number, then that's the round number. So 34.17 can be the stop loss. And then 47.42 target 1 and target 2. Let's be a little bit generous with this. Maybe we get a very nice move out of this to 57.16. So that can be target 2. 25%. And the stop loss can be 34.17. And the second option, because there's two options for this one, is getting below 29.62 and then closing a 4-hour candlestick back above. The first target can be 37.98, which is literally that first level of interest. See, if that level is not going to hold as support, it might go lower and then test this level as resistance. So that's then going to become a target. So it's both a level that I can use to frame a long setup from, but if it goes lower, that's a good target. And the second target can then be, well, the first target of our first trade, which is 47.42. That's target 2. And the stop loss can be 26.8. With SYM, for example, we're going to work with a stop loss that is approximately like 10%. So that means that for SYM, we can use 10% of our portfolio, so $50. For SYM, you can take $50. Take a look at Uber. Uber is one that we always want to trade, so let's take a look at this one as well. Yeah. Looks like this thing had a very nice move above that previous all-time high, dude. And now we're back at that previous all-time high. Let's see. So this could be an option. 57.22. And the second option, we'll also have two options for Uber. So 57.22 or 48.85. Those are the two levels where we can wait for a move below and then a 4-hour candle close back above to go long. So this is what I would like to see on this chart, so that it comes lower, takes stop losses, and then reverses back up. This thing is still coming down, right? So
this is the 4-hour candle close above?
Yeah. Maybe we can use the current support as our first target if we are long from lower. So see, this is current support, and instead of trying to go long here, I'm thinking to myself, no, I'm going to use this level as a target for when I'm long from lower. So first target can be 63.84 actually. And so we'll go long after we see a 4-hour close back above 57.22 after first going below that level. Target one, 63.84, and let's see, stop loss can be 55.11. Second target for Uber can be $70.43. And the option two is getting below 48.85 and then closing a 4-hour candlestick back above that level. So that's going to be option two. And our first target is going to be 57.22, which is literally the level which we're looking to take an entry from in option one. So once again, if this level is not going to hold as support, we'll be long from lower and we'll use that level as a profit taking target. Let's see. And the stop loss can be, let's do 45.79. And I'll also tell you how many dollars you can use to with a $500 account. So the stop loss is 7%. So I want to divide 100 by 7 is 14%. So 5 times 14 is $70 you can use for the Uber trade. And target 2 for that position can be 63.84, which is target 1 for our first position.
All right.
Not financial advice, but if your broker does not allow you to do that, if your broker forces you to buy full complete shares, you got to realize that you're then putting yourself in a disadvantage comparatively to traders who can buy partial shares. Like people that shit on partial shares literally have no clue what they're talking about, because that's way more fair and that's way easier to manage risk. Like if you only can buy one share, yeah, what do? Do you buy one share or none at all? At that point, it's not even that feasible to take it. Buy one share then and play it with one share, but it's not going to be the same 1% risk, 2% gain on your account. It's going to be a bigger risk and a bigger gain. Well, and these charts are relatively clean, right? So I'm not putting EMAs and RSIs and all these fancy things on, because this speaks way more to people. It's simple, it's understandable. It's like just lines on a chart, very simple.
Right. Reading it for what it is, yeah.
Let's do one more. I like Robinhood a lot. Robinhood is really a chart that I think we probably want to put that on socials, and we probably want to tell people that we told them when that shit flies to 23.74. So that's going to be a main target for me, 23.74. I'm thinking to myself, how would it be if we just take an entry like from a break back above 20, like for example, $20.10. Let me just calculate for a second. Where would the stop loss be? And what happens if we just take an entry from here? So 19.84 to 23.74 with a stop loss. No, I have to reassess for a second, but 23.74 definitely is a target. That I know. It's just a way of getting on board that I'm not 100% sure here. So let me see. If to take an entry at 20.9 after it closes a 4-hour above and then to target, yeah, so let's do it like this. From here, we want to see that Robinhood closes a 4-hour candlestick above 20.9. And when it does that, we want to have a limit order buy at 20.9. So literally it closes above, you put an order buy 20.9. Target 23.74. Stop loss 19.59. And that's the main idea. So a candlestick close above 20.9 on the 4-hour, and then basically putting in a limit buy order to buy at 20.9 with a stop at 19.59 and a target at 23.74. What I'm thinking, right, if it closes a 4-hour candlestick above 20.9, I don't know how far it's going to close. It might even not come back, but I don't want to chase price. I want to see that 20.9 level then flip into support, and that's where I want to buy. I will not breakout trading here. So the moment it gets to 20.9, it's actually still resistance. We got to break the resistance by closing a 4-hour above it, and then to come back to it, take an entry and target 23.74, stop loss 19.59. And for this position, let me see. So let's take 100 divided by 6.3 is this times 5 is. There's $80 you can use for this trade. And you can kind of see if you're looking at patterns, right? This is a cup, makes a handle here, breaks out, retests, goes up. If you like cup and handles, then you see the cup here, right? And the kind of the handle that it is forming right now. And we want to get in on the breakout and the retest. Very important.